Quick mortgage update for the end of May. Where are we? Let's look at the charts. We're starting with new home sales being down 3.4%. You're probably seeing this in the news. A lot of people are saying that this is the beginning of the end. The bubble is going to burst. We're going to get into dangerous territory. I'm here to tell you, calm down. Take a look at this chart. 2020, we were down here. We had very, very few homes for sale. Last 2 years, up here, we had a lot of homes for sale. And now, if you look, this is the long-term average. We're in a good place. Right now, inventory is extremely low. It makes sense that there are a lot less homes for sale. What does the chief economist of NAR have to say? Home prices in the meantime appear at no danger of any meaningful decline. There is an ongoing housing shortage, and properly priced homes will be selling generally under contract within a month. Maybe not a weekend like we've been seeing in recent months, but a month isn't bad at all. If it's priced wrong, it might sit for a while. And we might see additional decline in the number of homes sold with the higher interest rates, but he still believes that we're going to see appreciation around 5%, which I'll show you shortly, is close to the long-term average of how much appreciation we're seeing in our area. What about current inventory? This is a cyclical market. Right now, we're up to 1.03 million homes for sale. We're up from under 900,000. This is, again, a low level of inventory. Yes, we're up about 200,000 homes listed for sale in the entire United States. If you look at 2007, we had 3.8 million homes for sale, and now population is 14.8 million versus around 9 million. So a lot more people shopping for these homes, huge shortages, and this increase is normal cyclical. If we look at the evolution of a 300,000 home that was listed in 2019, that home price went up 5%, 15%, 21%. It's now at $438,000, and interest rate is at about 5.5%. When the interest rates were 4.33%, you'll see that the payment as a percentage of median income was around 18%. But don't forget, this is still under 25% of the new median income because median income went up as well. What about buying power? If we continue to see rates going up, say from 5.5% that we have today to about 6.25%, you're going to see a decline in your buying power to $27,000 to be exact with the same level of income. So if you are in the market, buy as soon as possible. You'll earn that appreciation and you will not lose your buying power. It will be added to your equity. And what about the mortgage-backed securities? This is the graph. This is the way the graph looked last year. Remember, these are mortgage-backed securities. So the lower the graph is here, the higher the interest rates. And we were going through a trend since January of just going down, 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 meaning interest rates going up, up, up. This is a difference between 101 and 106. That's 500 basis points. That's 5% of your loan amount that you would pay extra to get the same rate. Right now, if we look at this month, you'll see that we broke that trend and we're improving a little bit, going up, meaning rates are coming down, but we're trapped between support and resistance lines, and it's hard to predict how things are going to move forward. So again, if you're in the market, let's get you the house as soon as possible. This is a real estate report card for Snohomish County, where my office is. You will see median home price is not 300,000, is not 450,000, it's 598,000. If you look at the second graph, you'll see the appreciation, long-term appreciation goes between 5.5% to 10%, and a projection of, again, probably somewhere between 5 and 8% in the coming year. But if you look at the last graph, it shows you how much that house that you buy today is going to be worth in 5 years. You go up from 598,000 to 773,000, which is equity in your pocket. And you'll see also the huge shortage in homes being built. There's a big gap here, and so we're not in any risk anytime soon of significant declines in the real estate market. Now, if you look at the middle graph here, you'll see renters, you guys are paying someone else's mortgage, and at least 72,000 renters in Snohomish County alone can actually afford to buy a home, and they're not doing it. Let's get you a home. If you have any questions, I know I went through all this information pretty quickly, and I'm here to help you answer any questions you may have. Give me a call.